Hello traders, welcome back to another weekly watch list video. Now you must have to believe that you are witnessing one of the strangest time in the history of the stock market, where the good news is the bad news and the bad news is the good news. There is so much going on in the market that it will probably give a hard time to a god himself to predict the next move. Now the Wall Street has set to open sharply lower on Friday as solid job growth and a drop in unemployment rate last month pointed to a tight labor market, now giving more room for the Federal Reserve to stick to the big size interest rate hike. For the market to believe that whatever Fed is doing is working, the employment rate has to subside. But the current jobless claim inject that fear into the stock market by establishing the faith into believing that the Fed needs to do more. Along with that, there is another storm brewing with OPEQ, and I will cover that when I cover the oil related stocks. So without any further ado, let's get started. Starting with the Nasdaq pulled back significantly on Friday after the labor market report came out. This sharp sell-off might continue on Monday, but may end up in a dead cat bounce on Tuesday or Wednesday till Friday. Now NQ is still within this support zone, which exists between 11,272 to 10,929. On the extreme note, watch for 10,668 for the support. If Nasdaq cracks below 11,000, which is over here, then it can quickly come down to this level. In case of a dead cat bounce, watch for the upper resistance of this support zone, followed by the ultimate resistance level, which is at 11,557. Moving on to S&P 500. Now similarly for S&P 500, that support zone exists between 3,703.75 to 3,599. If it cracks below the 3,600, then the next target will be 3,522.50, where in case of the dead cat bounce, it might retest this support zone upper range at 3703, followed by the next move will be up to 3744. Moving on to dollar. Recent pound dollar debacle forced Dixie to make some noticeable move with the V-shaped recovery. There is a possibility that the dollar may pull back to 1100, which is right over here, as it is forming this rising wedge, which is kind of like a bearish formation. But before doing that, it might retest this 1113 once again before making that move. If it makes this move, then it will coincide with a little bit more bloodbath in the stock market before getting that dead cat bounce once they start rejecting this 113 level and started coming back down to 111. Moving on to VIX. VIX is still consolidating within this range. Nothing has changed from the last week's video. So it is still between the range of 3276 to 2931 and probably stay there within that range for a while until dust settles down and market picks up the real direction. Moving on to applied materials. Now the semiconductor sector is seeing some relentless selling, and that can be seen in all the semiconductor stock. Now the applied material is a little bit interesting because it broke below its support zone or the support level at 84.43, and what might happen is like either it can push back up by breaking above 84.43, which was its previous support, now acting as a resistance. If that doesn't happen, then probably it will get a rejection and it will straight come down to 70 level. Why? Because there is a less volume support for this type of price action. When price moves up, it usually coincides with a less volume because price doesn't hang there for a while to build up that volume. It jumps straight up. So this is the very important. You have to see whether it can retest this 8443 or directly come down. Moving on to AMD. Now AMD is at an interesting spot. You are clearly seeing it. Why? Now at 5840, which is the current price, it should get a bounce because it was rejected previously at the same level. In other words, the 5840 might act as a support, which was previously a resistance level. Now if it bounced back up, then the first resistance level that it has is 63. It's this gap fill at 64.43. If that doesn't happen, then probably it will come back down to retest 58.08 followed by 54.50. In my view, what will happen by the end of this year is like AMD will lose that 50s level and probably started trading in between 40 to 50. Moving on to Coinbase. Now Coinbase is looking bearish, and as it dropped down on Friday with a gap down, now expect a quick move to 62.22, which is right just below it, where it has a decent support as well as a little bit of resistance. But if it can hold it, then that will be a good. Either it can hold this level and push back up towards this gap fill, which starts at 70.91. Otherwise, if it breaks below this level, then the first support level is at 57.12 and the next one at 51.47. Moving on to CVS. Now CVS has fallen on a Friday on the news that it is about to acquire Cano Health. Now 91.23 was a major level for CVS because it held that level particularly well, and now it broke below that level. It also broke all these previous support levels. So what we need to watch for is a dead cat bounce to retest that previous stronghold at 91.23. If it get a rejection, then probably it will start coming down towards 81.90. Next one is Devon Energy. Energy sector is gaining some bullish traction as each passing day, as OPEC decided to cut down oil production by 2 million barrels per day, which gives a positive boost to all energy stocks. So we are seeing that effect right over here. You can see the parabolic V-shaped recovery in the parabolic form, and it recently reached up to 73.80 and got a pullback from there. Now what will happen is like it might get a decent pullback until it retraces this 0.38 to retracement of this whole move around like 66.64 before making further upward moves, something like this. Next one is Kroger. Now the Kroger is testing its previous support level at 43, which it broke slightly. Now if it loses that, then the next stop will be 39.82. But if it holds, then that could give a nice chance to bounce back up about around 44 and then followed by the 45.64. Lucid Motors. Now the Lucid is barely holding on to this 13.18 level, but will eventually pull back to 10.33 as I said previously, there is no significant volume supporting this type of parabolic move. So either it can hold it over here and push back up, retesting 13.57 as a first resistance level followed by 14.71. If that doesn't happen, then it will quickly come down to this level where it has a lot of support. McDonald is looking to make a double bottom formation, which is right over here, and it is in the formation moving towards that target price around like 229.47. Now if it get a bounce back, then the first target to watch for is 238.20. But if it broke down, then probably it will quickly come down to retest this recent low around like 9th March of 2022. So that's a huge gap. That will be a huge drop. I'm not expecting McDonald's to fall this far because it's a decent stock. It moves very slowly. If it makes this move, then that would be a significant, but probably it will get a bounce back up towards 238.20. Microsoft drop on Friday, similar to other stock and along with the entire stock market. It will retest to 30.37 because it is very close to that, and all these indicators are pointing to that downward move. If it couldn't hold here, then probably the next target will be 225.27, followed by a bounce back retesting this 230.37 and then 236.19, followed by the major resistance level at 241.80. Next one is NVDA. I mean, there should be no surprise as all the semiconductor stocks are down, but NVIDIA is looking pretty bearish in the sense that buying is not happening at all in NVIDIA's case. It is just dropping day after day, making lower lows instead of making higher highs. So it has to hold these levels at 116.44, 108.34. These are the two major levels. If it broke below that, then it will quickly come down below 100, and that will be a significant move for the NVIDIA. In my guess, probably it will come down below 100 by the end of this year. Oxy, as I mentioned previously, the energy sector is getting traction, and with all the government move, geopolitical and OPEC move, it provided that required boost, pushing it all the way up with this parabolic move to 72.50. As I said, in case of the Devon Energy, same principle applies over here. It will pull back. It is in the pullback, and that pullback might happen towards 0.382 retracement of this big move around 66.57 and probably around 65.84, where it has a decent support. So watch out for this move. This is very important because if energy sector continues to gain the momentum, then this is the right spot to enter position. Plug Power. Now the Plug Power is at the edge of this gap fill, which start at 1959 to 1744. Either there are two scenarios. Either it can bounce back up, retesting this previous support as a resistance around 21.22, or it can fill the gap, or at least fill the gap halfway through to 18 or something like that. Shopify is really disappointing, and its price action moves like a molasses, like very slowly. Now I was expecting Shopify to hold this support zone between 41.62 to 29.44, but it finally broke below it, and now it is at 27.19. Also, the significance of this level is like it is below all of its previous supports. So what it indicates is like it might eventually come back down to 1741, which will be horrible price for the Shopify stock, but it is what it is. That's what market is offering. We have to take it. Next one is Twitter. Now Twitter has a massive open interest around 45 puts, 45.04, and you can see like it has decent support at that level. So that's why probably market makers or most of the people are targeting for Twitter to come down to that level. Now, as long as this Elon Musk is keep brewing up controversies and arguments with Twitter regarding its buyout and whatnot, this price will keep fluctuating something like this, where it will make a huge move one day, and that move will disappear over the next few days, inch by inch. So it's just like take it for what it is, play it safely. That's what I can say. UPS is sitting at the edge of the support zone, which is around like 165.40 to 155.58. If it breaks below that, then there is nothing holding its price from coming down to 144.91, and below that it will probably come down to the edge of this another gap fill, which start from 135.40 to 123.66, but it's looking pretty bearish. There is a high indication that we might see a breakthrough below this support zone at 155.458. So that's it for this video, guys. If you like the information presented in this video, then please like, share, and consider subscribing to the channel. Thank you for watching, and see you guys next week.